Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slipped back in a mixed session on Monday, snapping a two-day bull run, however has rebounded and now currently looking back towards that key level of 65.90 to 66.15. A New York close above there would give further scope to the upside and look towards 66.65 and maybe on towards 67.20.25. I do like the way these technicals are firming up, mainly to the RSI, and therefore does give further hope of clearing that 60-day moving average and reinstating the call back to, as I mentioned, somewhere around 67 cents. Any pullback does expect it to be limited with 65.45 and the base seen around 65.10.15. Although the dollar index, which measures the greenback strength against a basket of 6 major currencies, continues to be lackluster or directionless as it holds around 103.30, the euro still is respecting this broad uptrend, which is somewhere around 108.35 to 45. In light of how the market is forming, I feel that the RSI could see a push further to the upside if we clear the midway point at 50. That would give further scope beyond 109.25 to 109.65 to maybe 110.5. In view of any pullback, it should be shallow as this trend is expected to hold firmly. All eyes are looking towards the Bank of Japan's rate decision and undoubtedly will probably remain unchanged at negative 0.1. However, although the Bank of Japan isn't expected to exit negative interest rates after December's annual inflation rate dropped by 2.8% to 2.6, while the core inflation rate softened to 2.5 to 2.3. All eyes this week will be on the US GDP and the personal consumption expenditures, or PCE, which is the US Federal Reserve preferred measure of inflation. This could lead to speculations about a possible Fed cut in March. Do keep an eye on this report, as the market now will see the Federal Reserve go into blackdown as the Federal Reserve's two-day monetary policy decision is just around the corner at 30-31 January. The sterling outlook has broadened and to the bullish case, as it still maintains above that key level, 126.10.15, and possibly seen soon a challenge to 128. The market is still relatively firm or bullish, and I still believe that the upside is the risk, and therefore see further demand to take it to its course, which is at 128, figure 30, and reassess. A little bit mixed when it comes to gold, but still holding on to its gains since recently bouncing off $2,000 an ounce. Nevertheless, any pullback should find demand around 2014 and eventually see that topside challenge anywhere from around 2040 to around 2050. Wrapping up with oil, we've got a bullish outside range day, a small trend coming in here, and risk to around the challenge of $75 a barrel. Clearing there could see an extension because there is noted here of a possible inverted head and shoulders. That is a shoulder, head, and a right shoulder that has been and still holding above this trend line, and a break above there should give a measured move further than $78 a barrel, maybe even onto 81 to a broader call. Technicals are firm, so all eyes on that top side is 75.5 to 75.75 and see if we see that break. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report. I hope you enjoy the rest of the day.